All right, good afternoon, everyone. We're going to go ahead and get started because we have a lot of information to cover today. Feel free to put them in the chat. And then at the end, I will go ahead and go through the Q&A. My name is Jayden Doyé. I own Prestige Accounting and Consulting, which is a DBA of Prestige Accounting Solutions. We are the premier CPA firm for law firm owners that are looking to grow and scale and make sure that they pay less to the IRS and increase their profits without burnout. And today's video training is going to be very important because I come across many personal injury attorneys that are excellent at what they do as far as advocating for their clients. However, on the financial front, there's assistance that needs to be had. And the reality is that law school just didn't teach them how to make sure that their firm is organized from a financial standpoint. So I want to make sure to get the information out there so that everyone is clear as far as how to financially secure their firm, make sure things are organized so that in the event of an audit, everything is good. All right. So first thing we need to go over is the unique challenges that PI firms face and why this is a hindrance as it pertains to financial organization. The first one being delayed revenue streams. So, with personal injury cases, sometimes it could take months or years to settle cases, and that takes a impact on cash flow, and that also makes it so that the firm owner needs to make sure that they have a financial buffer. Unlike hourly billing, a large portion of revenue depends on a successful case outcome. And the inconsistent revenue flow in between months can definitely hinder operations if you don't have a rainy day fund, which we'll get into. One of the other challenges is the high cost for case preparation, having to pay experts, investigations, medical records, things of that nature. And sometimes there's no guarantee of a recovery. So balancing the cost versus the potential ROI is going to be very important case by case. Then we have the contingency fee structure rather. So the pro is that there's no upfront cost to the client. And so that aligns the lawyer's interest with the client. But the con is that the firm bears a financial risk and there's a huge delay payment. Um, and waiting for that can actually, like I said, negatively impact the firm's operations. But in addition to that, sometimes there's also I've heard of this. I don't haven't experienced this personally with any of my clients, but there's the thought process of instead of pursuing a case as far as you should pursue it, the lawyer is more likely to settle it early for much lower than what they could have gotten have they went to litigation or kept up negotiations because they need that cash now, and we don't want that. Okay, so let's talk about how to navigate this risk. There's a few different things that you can do. One is diversification of cases. The reality is, if you are doing PI and you're good at PI, then you're most likely really good at well, not everybody, but there are a good amount of PI attorneys that are good trial attorneys as well. So instead of just marketing yourself as a PI attorney, you could also market yourself as a trial attorney. Just be clear with the type of cases and matters that you are taking on so there's no confusion. There's also, you want to make sure that you have insurance, have that malpractice insurance can help you mitigate risk, and client screening, making sure that you are ensuring that potential clients and cases have a reasonable chance of a positive outcome to prevent resource drainage. Now, let's talk about the importance of financial planning. Now, we're not talking about financial planning as you normally see it when it comes to working with a financial planner for retirement accounts. We're talking about financial planning for your law firm. Okay. So the first step is to make sure that you're setting clear financial goals. You want to set short-term goals and long-term goals. And you want to make sure that these goals align with your firm's mission and vision and core values. That's why it's important to look at those things every year, your mission, vision, and core values, to make sure if they need to be updated or not. Because a lot of times people get the mission, the vision, and core values from like a template or something when they first start. But as you grow your firm, it's important to make sure that you are that you're actually updating that as things change. One of the things that you also want to make sure is that you have two type of firms. You have a volume based firm and a value based firm. And so you want to make sure that your mission and your vision for the company as it pertains to if you're going to be a value or volume based firm, you're clear on what that is because that will change your financial goals as well. So with the volume based firm, you need to be putting money heavy in marketing so that you can get as many leads as possible because realistically not every lead is a qualified lead, right? So reviewing and revising this, I say at least every quarter from a financial standpoint is going to be important. Then we have resource allocation. Realistically, not everything that you want to spend money on, you can spend money on right now. So prioritizing expenditures are going to be important. What has to be paid? What are the things that cannot move forward in the firm without you paying for them? And what things can we possibly wait on? So when I started my firm, I have a I've made millions in the few years that I've been in practice. I'm in year 5 now, but when I started, I couldn't even afford the tax program that I needed. And there were a number of things that I couldn't afford, and I put it on a whiteboard. And what I did was, as I was bringing in more revenue, I would get the things that I needed. And then when I had extra profit, then I got the things that I wanted. And you can also a lot of times work out payment arrangements with vendors. So I was able to do that early on, get a payment plan with the vendor with the software Pro Series, and I've stuck with them ever since. So being able to allocate certain resources for certain projects or certain growth is going to be important, right? So if you want to hire a paralegal, then we need to make sure that we plan for that. If you want to hire an attorney in the practice, we need to make sure that we're planning for that. We need to know how many cases need to be in the docket before it makes financial sense to hire an attorney, before it makes financial sense to hire a paralegal. I usually say if you don't have financial backing, start your hiring strategy should be starting from the bottom up. So starting with the legal assistant, have them help you put the systems in place so when you bring in people like a paralegal or a senior attorney, they're coming into a firm that's organized and they're not like, ooh, child, the ghetto. They ain't got nothing. Those type of systems up in here. You don't want that, right? You want them to be able to get in and get the job done so that you can continue to grow. And so we have to plan our resources for things like that. We have to make sure if we don't have an extra 10K right now, maybe we'll have an extra 10K in December. So at least we know that we can cover this person's salary for a month or two. Those are the type of things that we're talking about when it comes to resource allocation and as it pertains to financial planning. The next is projection and forecasting. So yes, you have uncertainty as it pertains to your caseload, right? But realistically, if we really got down to the nitty gritty and you kept track of things of your cases, as I always recommend you do, you could realistically estimate how many of these cases will close in the next 6 months versus past 6 months, right? And so with that, you can Then plan for growth. You can make sure that you can plan for, okay, in the next 6 months, I know how much I'm going to make. And from a revenue standpoint, that's going to help me, because you can't plan a budget without revenue, without knowing how much you're going to make, because you need that to also help you plan for expenses. So you have revenue projections, that's step one, planning for that. Then you have expense forecasting, so predicting future expenses to make sure that you can cover that. Now, keep in mind, some expenses are going to be fixed and variable. Okay. So the fixed expenses are going to be the same no matter what the how many cases you have. So your rent, your landlord does not care if you only have one case or if you have 100 cases. Your rent is a fixed cost. Clio, let's say you're using Clio. By the way, Clio has a new PI feature, which looks amazing, which is specifically to help you organize. But that'll be a whole nother video. But Clio, your Clio subscription will increase depending on how many staff members you have. That's a variable expense. Then you have expenses that are once a year. So, like your insurance, for instance, you want to make sure that you're going to have the money, whatever month that comes out, you want to make sure you're going to have the money for that. And then last but not least, I like to call this scenario planning. This is where you're planning the best case, the average case, and the worst case scenarios. So, worst case scenario, we know we're making at least X amount over the next 90 days. Ideally, we'll make this much, but on average, based off of our previous performance, we've made this much. So this is where you can compare different scenarios. And this way, let's say you make an extra $100,000, you won't be sitting around confused what to do with it, because you've already done your scenario planning and you've already planned, just in case I get an extra settlement, what am I going to do with that money? How will I invest it into the future of growing this firm? And then, of course, the necessity of a rainy day fund. We've already talked about how uncertainty plays a part in cash flow forecasting. So making sure that we have a savings is going to be important. And every firm is going to be different when it comes to how much to save. I like to say ideally have about 1 to 2 months saved up, but it really depends. I'm more of an aggressive type of person, so I don't leave too much in the savings account, but I do leave enough if there's an emergency. But it's great because unexpected expenses, or if the settlements dry up and you need to maintain firm operations, you have that rainy day fund to help you. In addition to also having lines of credit. So if you have good credit, I'm going to tell you right now, you need to apply for lines of credit, so that apply for it now while you don't need it versus when you do need it. Because when you do need it, that's going to be when your credit score is low, because you've most likely already been using credit cards and your bank account balance is low. So when your bank account is high, that is when you talk to your personal banker about getting a line of credit, getting credit cards, things of that nature. When your credit score is high and when of course, your bank balance is high. All right. So, how to identify challenges and opportunities. So, I recommend doing a SWOT analysis, SWOT. And I have a worksheet on this. So, if you need it, I can send it to you. Just put the word SWOT in the chat. So this is how you can identify financial challenges and opportunities. And then you also want to benchmark your firm as it compares to your competitors and the industry. And the only way to do that is to get out there and network and see what other people are doing. Now I'm going to give you some key financial metrics to track. So you want to make sure that you write these down. The first one being client acquisition cost. This is the cost for acquiring a new client. The components of this include advertising, marketing campaigns, and consultations. So the importance of this is this helps you understand how much is spent to obtain a new client and access and assess the efficiency of their marketing and outreach efforts. So, a simple way to calculate your client acquisition cost is to take the total amount that you spent on advertising and marketing for the year and divide that by the number of new clients, new matters that you've gotten, and that will be your client acquisition cost for the year. Now, there's a lot of more intricate ways that we can do that, but on the simple, if you're just looking for the most simple, basic way to do it, that would be a simple way to do it. So if you spent $50,000 on advertising and you only got 50 new clients for the year, then that means your client acquisition cost is $1,000. And you have to ask yourself, is it is that too high or is that okay for me? That depends on how much you're making for these cases. If these cases are only making $8,000 because we're talking about $25,000 policy limits, then maybe not. Maybe that client acquisition cost might be a bit too high, and we might want to look at other marketing and advertising efforts. But this helps you formulate and make data-driven decisions as it pertains to advertising and marketing. The next is going to be revenue per lawyer. This is the total revenue divided by the numbers of lawyers in your firm. So depending on and so this should increase every year ideally because your the lawyers that are working in your firm should be more efficient and should be getting a higher amount of settlements throughout the year. So this is definitely something great to use to utilize when it comes to even using figuring out what bonuses are going to be, measuring productivity and efficiency. And it can also help you figure out if your firm is understaffed or overstaffed. So in your first couple of years, when you're the only lawyer on the team, you'll have a benchmark for revenue per lawyer. So you know how much you can handle on your own, right? So anybody that you bring on should be able to do at least that because not only were you running the business, but you were also doing handling the cases. When if you bring in a lawyer, they'll just be handling cases. Next metric is case ROI, which stands for return on investment. So this actually helps you calculate the return on resources that you invested in a case. So in order to do this, you're going to take the net profit from the case minus the cost of the case. Okay, so net profit minus the cost of the case, and then divide that by the cost of the case. So the cost of the case include direct expenses, those hard costs, and then labor as well. This is why it's important to track time because even if you're working on contingency, you're not billing by the hour, you still want to be able to really get down to the nitty gritty and calculate the cost of each case based off of the labor hours. So if you know you pay somebody $50 an hour, you can indirectly calculate how much labor costs for each case. So when people say I'm a PI attorney, I don't track time, that's one of my number one arguments. Next one is going to be operating margins. This is the percentage of total revenue that exceeds operational costs. This indicates the firm's overall profitability and financial health. And this helps you identify areas of excessive spending or potential avenues for increased revenue. Okay. So again, this is the total revenue that exceeds operational cost. Aging accounts receivable is not usually going to be a thing if you're only doing PI, but Basically, this is the outstanding balances owed to the firm. And if you have accounts receivable that are too far gone, like when people get to the point where they're 90 days past due, you are not very likely to collect. So we want to make sure that your aging accounts receivables don't get too far. And in order to improve this, we want to streamline billing processes, enhance client communication, and employ stricter payment terms. All right, next is going to be utilization rate. This is the proportion of billable hours to a lawyer's total hours. Again, billable hours versus total work hours. This is important because it measures productivity, and it will help you as far as identifying non-billable tasks that either be delegated to someone on the admin team or reduced. So if you're paying someone a six-figure salary to be a lawyer in your firm, the idea is that most of their time is billable, not admin work. But if we're not tracking time, then we have no way to know how many billable hours. And when I say billable hours, I know we're not billing by the hour, but anything that's any time spent directly on a case is still billable hour for the sake of KPIs. Okay. The next one is realization rate. This is the percentage of billable work that gets invoiced and eventually collected. This is negatively impacted by write-offs, discounts, and unpaid invoices. So if your legal fees, a lot of times PI firms have to reduce their legal fees, right? So they'll reduce their fees because they feel bad that the clients are getting less than what the firm is getting, which makes sense, right? And so when we're looking at realization rate, the ones that are giving us that are negatively impacting our realization rate, we want to examine those type of cases and see what's the common denominator and how can we avoid it if possible, or is it worth it? You know, is it worth the write-off and the discounts that we're giving? All right, now let's talk about budgeting and cash flow management. So budget planning is creating a plan of how to spend the firm's money. So we're looking at revenue forecasting. We talked about the fixed expenses and variable expenses, but then we also have to plan for capital expenditures, those being if we're doing improvements on the building, if we're buying heavy equipment like big printers or company vehicle, things of that nature. We want to make sure that we can afford that. We've already talked about having a rainy day funds. And let's talk about cash flow monitoring. So people sometimes don't understand that you can have more, you can have, people don't understand how they show a profit when they don't feel like they had a profit. So let me explain how that works. Because cash flow and profits are not the same thing. So let's say you had $50,000 that came into the firm in legal fees this month, and you paid out $40,000 in expenses. That means you have a $10,000 profit. Now, if you had to take that $10,000 and pay it towards loans, even though at the end of the day your cash inflow outflow was a wash because you had the same amount of cash inflow that then you had outflow, that 10 you still have a $10,000 profit. because paying a loan is paying a liability. It's not lowering your profit. So whenever I get a QuickBooks and I see someone who has a mortgage payment to a as an expense, I'm like, oh Lord, this accountant doesn't know what they're doing. Because a mortgage payment, a loan payment is not an expense. The only part of a payment, loan payment that's an expense is the interest portion, which is why as detailed oriented accountants, we request loan statements so that every month we can break out the interest versus principal payments to loans. Now, sometimes the amount of interest paid is immaterial, meaning it's so little it's not going to negatively impact the financial statements if we do it at the end of the year. And for those we do it at the end of the year. But if it's a good amount, like some people are paying $1,000 a month in interest, we want to make sure we calculate that every month. Now, when it comes to debt, you have good debt and you have bad debt. Good debt would be debt that you can use to actually get a return on investment. So for instance, I love my Amex credit cards because they give me points, and I'm actually going to use those points for a free round trip flight to South Africa in February. So I'm so excited about that. That would be an idea of good debt. I pay it off every month, um, and so therefore I'm not getting any interest. The only expense that comes along with that is the annual fee of 695, which pays for itself. Okay. Bad debt would be debt. There's a lot of these predatory loans where they're like, oh yeah, the loan is 80,000 and you only got to pay back 100,000, but they make you do weekly payments, and the interest on it is freaking ridiculous. It's like $30,000, and they get there, and then they take like a 10%, anywhere from an 8 to 10% fee up front. So you don't even get the full 80,000, you get 71,000. So even if you pay it off early, they still got their money. So avoid at all costs those type of debt. I'd rather you be late with everybody else. The late fees, honestly, this is what people don't understand a lot of times why it's so important to have an accountant, because the late fees that you experience will probably be less than the interest that you'll pay for these predatory loans, which is why it's important to have somebody in your corner to help analyze stuff like that. Now, there's various different ways that you can invest in your firm. I first say investing yourself with development. So CLEs, going to these retreats and things of that nature where you can step outside of working in the business and planning to work on the business. Because let's be real, you need to be in a creative space in order to effectively plan the direction that you want your firm to go into. And when you're in lawyer mode, you it's difficult to do that. It's two completely different parts of the brain that you're using. So first invest in yourself so that you can serve as a mentor and growing people under you. And also give them education experiences. Opportunities as well. Um, and the other big investment is making sure that your marketing is on point. Okay, so I think ever since 2020, I've probably done 6 figures a year in marketing expenses, and it has definitely paid off. Um, so just depending on what your budget is, um, there's a effective marketing strategy for every level of budget. So if you barely have any money, that sounds like to me you most likely have some time. So you're just going to have to get creative and do some of the things that you need on your own, right? The other way you can invest is hiring the right people. We have a really good team, a really, really, really good team right now. Like this is probably the best that I've felt about my team. And we are about to bring on 3 more people before the year is over. And we've made it so that I, as a business owner, don't have to do all the training with everyone. They get cross-trained by other people, and there's learning videos that they can watch in a learning platform. So if you hire the right people, then you will see a return on your investment because you'll be able to increase your capacity. And if you're investing in them, then they're more invested in working in your firm. So it's a cycle. Let's talk about accounting softwares and tools. So the reality of the situation is that QuickBooks by default does not is not made for law firms. So we as law firm accountants, we have certain processes and procedures that we do in order to make it work for our clients because we love QuickBooks, right? But the lamest person who, might not be very privy to how law firm accounting works, it's definitely easy to make a mistake because anytime a transaction happens that involves an IOTA account, there's something called double entry accounting that has to be done. So we have to manually create a journal entry. Remember when you had to take basic accounting and they talked about debits and credits? Well, yeah, we have to go in and do a journal entry anytime a transaction happens with the trust account. And the system doesn't automatically do that. It's an extra step that's not done. And so when I'm doing QuickBooks diagnostics for prospects, I can easily, when I look at the liabilities and I don't see sub accounts for trust account liabilities, I can easily see that the person they're working with doesn't know what they do. They don't know what they're doing. And so that complexity presents unique challenges as it pertains to accounting for law firms. Now, there are a few different softwares. QuickBooks Online is the first logo you see. Clio integrates with QuickBooks Online, but personally, I don't like it to feed the data in there. It's just too much. Personally, because I've been doing this long enough, I know how to do a journal entry to make sure that what's in Clio matches what's in the accounting system. And then you have Cosmolex, which is a good accounting and case management software. And then FreshBooks is kind of new on the market. So I don't have too much, to say about FreshBooks. But I am both a Clio, a QuickBooks, and a Cosmolex partner. So if you have any questions about that, I can help you navigate that. So key features to look for are going to be trust accounting, time and expense tracking, what reports can you get, what kind of financial reports can you get, and what integration capabilities does it have? Does it connect with the bank and things of that nature? And then you want to do a cost benefit analysis to figure out how much time will this be saving me based off versus how much money it's going to be cost. And usually when you do the cost benefit analysis, it's definitely worth it. Now, when you start getting into these more expensive programs like Smokeball and Filevine, those are big investments for, I'd say, firms that have at least 10 people usually. But for smaller firms, a lot of times it can be a little too much, honestly. Now, if you're going to transition into a new software, you want to make sure that there is data migration, that you can migrate your stuff. You want to make sure that they provide you with training and onboarding, and you want to see if there's a trial period so you can test it out before you fully commit. As you know, CPA firms and law firms are definitely targets for hackers. And so you want to make sure that your client's data and financial information remains secure. I actually got an email from my merchant service where I have to complete some paperwork to ensure that I am PCI compliant. And this is as of November 2023. So at the end of this month, basically the email said if I didn't complete this checklist and things of that nature, that I will be out of compliance and can be fined if it's not done by the end of the month. So I don't know if everybody's experiencing this, but it's definitely something that you want to make sure um, you're keeping up with the regulatory compliance. And PCI compliance, it deals with how you take and store client payment information. So there are rules and regulations surrounding that. And these companies want to make sure that they are safeguarding themselves. And you, as a law firm, want to make sure that you're safeguarding your firm. So let's talk about what it's like to work with professionals. So there's a few different type of professionals. There are accountants, financial advisors, and bookkeepers. Accountants handle financial records, they ensure tax compliance and offer financial advice. Fun fact, technically, you can't call yourself an accountant if you're not a CPA in certain states. It's very interesting. But yeah, if you have a firm, if somebody has a firm, they cannot market themselves as an accounting firm if they are not a certified public accountant. So because I am a certified public accountant, I have a CPA license for myself, and then my firm has a license as well. So those are two licenses that I have to make sure get renewed every 2 years or something like that. Then we have financial advisors. Financial advisors are the ones that are giving you guidance as far as investments and future planning as it pertains to like your retirement accounts and things of that nature. So accountants and financial advisors work hand in hand when it comes to tax planning. So I can tell you, I advise you to open up a 401k, put this much in there, and then put more into and then you can do money to a profit sharing, and then I give that tax plan. We actually have like a PDF tax plan. Financial advisors that work with our clients love us because we make it so easy for them to understand what the tax plan is. Because realistically, the clients have difficulty explaining because it's new to them. And so by having that PDF, the financial advisor can move forward with the plan. Bookkeepers do the daily management of financial transactions, including invoices, paying bills, and payroll. If you have an in-house bookkeeper. Now, we have bookkeepers as well, but we do what's called after the fact bookkeeping. So after is all said and done, you've already paid the bills and things of that nature. We make sure that we account for it in the accounting program. So when you have reached a certain, we're going to talk about when to hire. Um, I think in the beginning, you definitely need to have you need to have someone that definitely need to have an accountant. Definitely need to have a CPA for sure. And someone that specializes in working with law firms for sure. And we'll get into why in a second. But there's a certain level of growth that you'll get to where paying the bills and doing the invoices and things of that nature will become cumbersome. And that's when you'll know it's time to also have an in-house bookkeeper to handle those transactions. And sometimes it's not a bookkeeper, it's like a firm administrator that's doing that stuff. But you just want to make sure that this person knows what they're doing or they are given the effective training to do so. Now you also want to think about if you are going through a business divorce, if you're leaving a partnership, then you may want to consider hiring a new CPA because the previous CPA that served the partnership, if they're still working with the other partners, they may have a better relationship with that partner. They may technically not have a best interest in your favor. I've actually seen that. I've quite a few times we've gotten clients that have went through a business divorce, and it's so funny because their CPA took forever to do the business return, and we're ready for tax filing, right? And we're just waiting on this big firm that everybody loves so much to finish the partnership return so that I can do my job. And it just goes to show that that firm just didn't have the capacity and the level of service needed to really serve the client. So they're definitely not going back to their old accountant. Now, when it comes to managing trust accounts, this is a critical role and a sensitive nature as it pertains to hiring. This is why I say again and again, you need to make sure that your accountant specializes in law firm accounting, because I have actually saved someone over $100,000 in taxes because their previous accountant miscategorized a deposit or multiple deposits into their trust account as income. I've heard so many different stories, read so many different stories, and a lot of this can be avoided if you are working with the right person. Now, here's the reality of the situation. If you're not managing your trust account properly, your accountant can't account for it properly. So it's a two-way street. You have to work hand in hand and make sure you're both on the same page. Okay. So to set up your trust account, if you haven't set it up already, you want to make sure that you are working with a bank that is approved by your state bar. You want to look at fees, location, services offered. Those are all different considerations as it pertains to choosing a bank. A bank should not charge your IOTA account fees. Those fees should come out of the operating account. If they are charging you fees for a trust account, run. Do not pass go. Do not collect $200. Okay. Now, when you get a settlement, I think this goes without saying, but just in case someone doesn't know, that settlement goes into the trust account. And then from the trust account, ideally, you'll pay expenses that are remaining and you will settle it up. And then you can pay the firm the earned legal fees. You should make sure that you have the proper records. So, this is the part that gets people tripped up. They think just because they have a settlement sheet that they're good. Absolutely not. You need individual client ledgers, meaning every client that has a that has money going through your trust account is supposed to have a ledger. Every month, there should be a reconciliation, a three-way reconciliation, meaning comparing your bank statements to the ledger and identifying discrepancies. And I recommend maintaining these records for, I would say, 7 years. Okay. Now, in a financial packet for a personal injury case, you want to have your disbursement or settlement sheet. You want to have, and this is stored internally, by the way. You want to have copies of the checks or however you paid the expenses that you're claiming on the cover sheet. You want to make sure that you have the invoice. Yes, I understand that this is a personal injury case, but guess what? If you earn legal fees, you should be creating an invoice. I know that's going to trip people up. That's where people are going to stop watching right there. But if you earn legal fees, there needs to be a source document to attach to those legal fees. And that is the invoice, not this disbursement sheet that y'all think is going to work in the event of an audit. Okay? And then any type of record of the settlement that you received. Okay. So disbursement sheet and all your source documents, including invoices, payouts, and money came in that came in. That's what you should have on file for each of your clients. Your accountant will love you. Okay. Now, I don't care how bad you need money, don't dip into that trust account. Definitely will get you suspended or disbarred. Okay. And you want to make sure that you are timely transferring fees from your trust account to your operating account. You're timely doing your invoicing and transferring fees or writing the check, however you do it. But the rule is timely. So people that let it sit there for months or years, I mean, good luck. That's all I'm gonna say. But every bar rule is pretty standard when they say timely transfers of fees earned. You don't use trust money for operating expenses, and you don't use it to pay payroll, and you don't use it for vacation. All right, so let's talk about anticipating um, crisis. You have economic downturns, you have industry changes, you have pandemics, you have internal challenges like a loss of major clients or major referral sources. If you read the book Fireproof, he talks about how he was getting a bunch of cases from one PI attorney, and then one day he got called to his office and he said, "Well, I'm not sending you any more cases." Okay. So we want to make sure that we are ready for stuff like that. And how to actually manage that, we want to do an immediate assessment to understand the depth of the crisis. You want to prioritize expenses, figure out what the essential expenses are, and keep open communication. Keep your staff, clients, stakeholders informed, and your vendors. Don't just ghost somebody that you owe money. You need to actually keep them in the loop. Otherwise, they're just gonna send you to collections. Okay. A lot of times people will work with you. So if it gets really bad, you want to look at restructuring and cutting costs. If you have to lay someone off, ideally we don't want to do that, but sometimes we have to. Adjusting your marketing strategy so that you can get things, you can get a cash injection, meaning you can get some, when I say quick money, I mean you can get some cases where maybe you charge a flat rate and you've earned that immediately, and you know, um, that's what I'm talking about when I'm talking about looking at immediate revenue generation. And then seek external financial help. Look at loans, lines of credit, negotiating with creditors, or government programs. If we ever have another pandemic, we learned that the government, they usually have programs and things of that nature. So that we have that advantage. Okay. Now, we're almost at the end, but I want to talk about tech. So you have accounting software, you have billing and time tracking, expense management, payroll systems, and financial dashboard and reporting. So ideally, all of these things will be in one, but realistically, it's not, right? But you want to minimize your tech stack. But those five core areas: accounting software, billing and time tracking, expense management, payroll system, and financial dashboard and reporting, those five systems are key in making sure that your firm is organized. Okay. And making sure that your different tech tools, which I call it a tech stack. A tech stack is just the various different softwares that you're using. Making sure that they're integrated is going to help you as far as automating repetitive tasks. And a lot of times these softwares are cloud based, so you can Be like me and travel the world and still make money. And AI is now getting integrated with a lot of these tools, and I'm loving it. Now, as far as security is concerned, you want to make sure that you are still securing your client and firm data. So, making sure that you have a good firewall, consider using a VPN, virtual private network, remote desktops. Make sure that you have back in the day, we used to have a physical server that a bunch of computers would share. But now we have virtual servers that these virtual remote desktops share. And they usually have their own security along with that. But you want to make sure that you have good cyber insurance. And a lot of times, your cyber insurance will assist you with policies and procedures you need to implement and as well as resources that you can use. And a lot of times, you can even get like a free consultation with a company through your cyber insurance. Okay. When it comes to implementing new tools, you want to first do a need assessment. You want to look at a timeline as far as how long it's going to take to do training and onboarding. And you want to continuously evaluate. So at least once a year. I like to do my evaluations around this time of year, November, because Black Friday is going to be around the corner and everybody's going to be able to do a pay in full discount. And I like to take advantage of pay in full discounts. All right, this is the most boring part, so let's just breeze through it. It must be said. Your essential financial documents for internal retention include your foundation documents, so EIN, S corporation election, state, um, your stuff that's on the Secretary of State website, things like that. All client related documents, you want to make sure that your fee retainers, billing invoices, expense receipts, all of that are going to be saved in the client's file. I recommend, even if you use Clio or whatever, or my case, that you still have some type of cloud-based storage system. So if that system goes down, you can still retain your files. And keep in mind that your internal files, as it pertains to your firm versus your clients, are going to be completely separate. Okay. Then, as far as financial statements are concerned, you want to have bank statements, your general ledger, payroll records, tax returns, and filing. And most accounting firms don't provide their clients with general ledgers, but what we do is we provide, in addition to the financial statements, we provide the backup. So they have all the source documents that were used for their accounting. So they can historically save that. So if they're ever audited, they already have everything together. I don't know why accountants make it so difficult for people, but I try to make it as simple as possible. If you're ever audited, you want to keep your findings, recommendations, and follow documentations. Any certificates of documentations proving adherence to legal or industry standards. Expense reports, both professional development wise and operational expenses. So, like for instance, if you go on one of my retreats, you want to make sure that you save the flyer, you want to save the program. So the IRS can't say, oh, you went to South Africa or you went to Mexico for a vacation. You can say, no, this was a business trip, a professional development trip. And here actually you go. So you can see it's professional development. Here's the proof. You want to also make sure you keep all your investment and asset documentation. So if you have any properties, property leases, investment portfolios, and any type of loan documents, all of that you want to make sure that you have. Now every state is going to be different as far as documentation is concerned, but I say 7 years. And the last part is tax planning. However, we are going to do that presentation another day because that presentation, honestly, I try to squeeze it in here, but realistically, that is an hour long presentation on its own. So I hope you enjoyed today's presentation. And if you have any further questions, you can email me at jaden@prestigeaccountants.com, or give our office a call at 833-672-2268. Or you can text CPA to 21,000 You'll get my digital business card. You'll be able to book a consultation, see our website, and all of that good stuff. So let me know what you think. Share this with your friends, and I appreciate your attention today. Everyone, have a blessed day or blessed night, depending on when you're watching.